Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Thursday, the 5th of June, 2008, and the market closed with a very nice gain here today as the support held above 137, and the 50-day moving average acted as a level of support for this market. So it looks like this market is kind of coiling between the 50 and the 200-day moving averages right now, and we had a couple days close below that 50-day moving average, but the direction of the 50-day moving average was higher. And this is why I don't like to make a prediction at a key level like that, because basically you have to be prepared for anything. And like I was saying yesterday, a move above the level here at 139.20 would signal that the buyers were back in control, as that would be where there was a higher high that went along with the higher low. So moving above there, that's where buyers took control today. Earlier on my blog, I put this chart on there that showed the support at the or supported the 50-day moving average, and that the spider did find support there, made this higher high along with the higher low, and as I said, it was bullish, and I put that out at 10:15 Eastern. So that was right as it was breaking out in there at so 10:15 right here. Keep an eye on the blog, because that was really, again, where the buyers took control as it moved to a higher high in here to complement the recent higher low. Now we've got the market back up to this little level here where we've had a little bit of prior resistance at 141. That doesn't look like it should be too much of an obstacle. We're probably headed for another test of the 200-day moving average up near 142.70 or so. And then we've got this downtrend line to deal with as well. Again, the weekly time frame gives us reason for concern, but unless you're an investor, that's just something to give you perspective on the larger trends. The shorter term time frames is where I think it again still makes the most sense to be trading in this environment. And clearly now the buyers took back control in here today, and that's what you've got to focus on. So here we can see again on a 5-minute time frame with a little bit more clarity, the market was strong. It rallied quickly, kind of stalled just a little bit below that level at 139.20, and then it ramped right through there, pulled back a little bit, and then made this nice pattern of higher highs and higher lows. The most impressive thing is, I think, that oil was up, or the USO was up $5, $4.88, and they said that this was the largest one-day gain in oil. And you can see it came right at that trend line that this market's been holding. So there's been a lot of calls for a market top in here, and this level might be the top. But right now, the trend is still clearly higher in oil, and people who fight that trend will often find themselves at the mercy of these emotional short squeeze rallies, which occur so quickly. And here, I mean, this went from 100 to 104 basically in just a couple hours, a 4% move. So oil was very strong today, obviously. And the impressive thing is that it didn't seem to matter to the S&P 500 or any of the other markets in here, as we finished with a very strong gain, and that's what to focus on. Short term, we may have a little bit of resistance here at 141, but now we've got to look at that 139.50 as the key support going forward. And buyers are back in control here on the short-term time frame, so you've got to be bullish about that. The Russell 2000 was up $1.93, blasted through that $75 level, and back above the 200-day moving average for the first time, really since looks like back in about October of last year. It's the first time above that 40-week moving average. So now, I've been focusing on this 75 level. The market is clearly above that. If it can hold above here for the next couple weeks, then I think that the dangers of a larger sell-off are largely behind us. So continue to just trade what you see. There's been a lot of great setups in the market. I pointed out some of those this morning here. As far as some ideas, AMSC, Brocade, TSL was a big one, and then that Vivis that I had mentioned yesterday had a nice day as well, as it, I pointed out here where the buyers took control above this little level here, and the stock was nicely higher in here today. So now what you've got to do is manage risk in there according to the way you view the market, and what you think the percentage chance of it continuing higher are. Next Tuesday, this company has some kind of important meeting before the market opens, so I would likely be out of it before that if I was you, but everyone's got their own way to trade, which is why I don't like to make specific recommendations, but rather show you some interesting setups when I see them.
To the market, I want to show you something. I think you should get a piece of paper and pencil and write this down. I want to show you a book that a friend of mine, Brian Shannon, just wrote, and I read it over the weekend, and it is a gem. Everything you need to know about technical analysis is in this book. This is it, right here. Technical Analysis Using Multiple Time Frames by Brian Shannon at Alpha Trends. Brian captures everything you need to know about technical analysis and then some in this book. I highly recommend this book. It's probably the only technical book you'll ever need. And believe me, I read them all. And this is the easiest to understand and makes the most common sense. And Brian uses in this book what works.
Okay, that was Kevin Feehan, a 35-year specialist on the New York Stock Exchange, and his impressions of my book. If you haven't ordered that yet, it's going to ship out on Saturday. So back to the markets. Let's take a look at the semiconductors. Someone asked me yesterday, why do I follow the semiconductors? Basically because they're a leading group. They're so strong into technology and a leading indicator for technology, basically, that it makes it very important as far as the overall technical trends go. Looking at this group, you can see we do have these higher lows in here and a little bit of resistance in here recently. If you squint a little bit, or if you actually just blow it up to a shorter term time frame, you might see this little cup and handle formation in here, and moving above this 33 level. I think that might lead to a test of the prior highs at about 34. So the semiconductors continue to act bullish. They're basically range bound right now, but looking like maybe they're ready to move higher again. We do have the potential that this prior level of support can slow it down, but it's only, we only know resistance after the fact. For instance, the IWM tested that level at 75, but really just blasted right through it. So you have to be aware of those levels, but trade what you see, and listen to the message of the market always. The NASDAQ 100, this group I've been saying has been neutral between the 48 and 48 to $50 level. Here we saw that this market made a higher high today, so back to buyers in control. Short sellers are just getting run over in this market. So the movement back above $50 a share clearly put the buyers back in control here today, and they'll remain in control as long as, for now, the $50 level acts as a level of support. This market really has a lot going for it bullishly, and the ability to shake off the continued rally in oil is one of the most bullish things this market can really do right now.